Good morning, good afternoon, everybody. Give me a second, let me make this a little higher. Thank you, gentlemen, for joining us. Ladies and gentlemen, this is the leaders panel. I deliberately asked Mansi not to give a detailed introduction for these fine gentlemen here. I'm going to let them do the honors and share with us a little bit about, well, what they do professionally, a little bit maybe outside of the professional realm, maybe a 30-second to a 1-minute spiel for the audience so that they know you and your brand a little better. Simon, why don't we start with you?
I spend a lot of time on the plane to keep up my frequent flyer points, keep talking with the hotel owners to make sure he's happy or she's happy, talk to the development guy because they always come to me as this is the best deal since sliced bread. Don't miss this one. Fantastic return, and you got to go into it. And this is what we do all the time, on the road, talking to various developers, hotel owners, try to understand the trends of the industry. We're sitting here today in Bali, Indonesia, try to understand Indonesia. I think we look at the report just now, just released by you guys. Obviously, it's a changing trend. And same with every other country we operate in. And really so much knowledge and data that you can absorb at the end of the day. And you try to make the best decision you could with your experience every day. And not returning the emails.
I would like an introduction on StayWell as well, though.
Okay, Park Regis, Leisure Inn, 2 brands, 35 hotels operating in a number of countries from Australia, New Zealand, India, Indonesia, China, Singapore, Middle East in Dubai, Saudi Arabia, and United Kingdom.
Splendid, thank you. Martin, may I request you to share a little bit, please?
Yeah, absolutely. Well, I was lucky enough to choose my passion as my profession, ended up in the hotel industry 32 years ago, and the rest is history. Love what I'm doing, work for Hilton. Hilton today, a company that is nearly 100 years young. We are celebrating our 100th anniversary in 2019. In this part of the world, Indonesia in particular, we've been operating here for 40 years, growing our footprint here substantially. On a global basis, I guess we are the largest hospitality company for the next couple of weeks until China ratifies the Marwood deal. Then we will be the second largest, but we always say it's not about size, it's about quality. And we currently have a portfolio of 13 brands, which we are growing on a global basis.
Splendid, thank you. Gaurav, may I?
Sure. So I am responsible for global development function for AccorHotels. Accor, similar to Hilton, is a global hotel company. We are not quite that large, but just over 4,000 hotels, so reasonable size. We're very lucky to have a very strong position in this part of the world, in Asia Pacific, with about 740 operating hotels, 150,000 rooms, and closer to home in Indonesia. We've been in this market over 25 years, very well entrenched in this market, operating today over 100 hotels and 20,000 rooms in this market. Another 85 hotels with about 17 to 18,000 rooms in the pipeline. So Indonesia is very, very important to us. It's a big business for us, and we're pretty focused on this market.
Great. So a French company, an American company, and an Australian hotel brand doing business in Indonesia for years and decades at end now, and with significant inventory to talk about. Tell me, let's go back to you, Simon. Let's start and peel the onion a little bit more. Indonesia, how does that fit into your overall plan for the growth and the future of StayWell? What is your current presence here, and how do you see this moving forward?
From a geographic standpoint, obviously Indonesia is very important to a hotel group like us based in Sydney, Australia. It is the closest country to Australia in terms of size. We're talking a country that has, I think, over 300 million people. And a place like Bali, probably been one of the most popular Australian holiday destination for a long time. I still think Australian tourists is probably the #1, and with China sort of catching up quite quickly. And we can see the economic growth of Indonesia over the last 15 years. I don't need to tell you that. So for a hotel group like us, it's a matter of trying to understand the market. We'll be able to bring our brand to Indonesia to fit, the demand of the market in a sense. Right now, we've got 3 properties in Indonesia with 2 in Bali, 1 in Kuta, 1 in Seminyak, and 1 in Jakarta. Our development team is obviously working hard in the sense of trying to get more properties. Our philosophy is not about just size, having the right quality of product, matching our brands that we are proud to represent, and as well as finding the right partner. To me, in these days, a very competitive environment. I can't remember how many hotel brands we're talking about, probably over 100 hotel brands around the world. In a very competitive market, in some cities like Jakarta and Bali, I think, Bali has over, 1,000 hotels in a sense. And you got all sort of product here, from 5-star to luxury to mid-scale to budget to boutique to lifestyle. So at the end of the day, you need to be absolutely clear who your target customers are, and finding the right partner who will be able to share a similar vision to you. Most hotel owners and developers, as you guys would know, and some of you sitting in this room, you have a completely different type of return in investment and time horizon in a sense. So hotel operators like us obviously like to share that, our experience with you, and what we believe is a normal type of return in investment in the typical hotel. Finding the right partner who understand the challenges in the competitive market is important. And I think, no doubt, like most hotel groups, we will have our market share going forward in the next 5 to 10 years. And Indonesia will be one of the most important, I would say, economy in Asia. And you can look at the number of hotel rooms comparing to the more mature economy. You look around you, like in China, you have seen the growth of the Chinese accommodation market over the last 10 years in a sense. So I think Indonesia still got a long way to go in terms of getting to that inventory in a sense. So there is no doubt in our mind, us and plus all the others in this room here, we will continue to participate in the growth of the Indonesian hotel market going forward.
Okay, thank you. Martin, how does Indonesia fit into your organization's vision? You have some inventory of significance already in this market, and Indonesia has been a market that do you see a lot of growth here for Hilton?
Absolutely. I mean, the fact that we are probably still at our humble beginnings compared to Accor doesn't mean we are less passionate and less committed about Indonesia. Today we have 4 trading hotels in Indonesia. We have 2 in Bali, 1 in Bandung, 1 in Jakarta, and we have 13 in the pipeline. Like I said, compared to Accor, more the humble beginnings, but we see great opportunities. You look at Indonesia and you forget for a second that it's the 4th most populous nation in the world, but you look at the projected increase in inbound travel into Indonesia, doubling from around about 10 million to 20 million. You look at the increase in domestic travel, bound to increase by anywhere between 25 to 30 million over the next 4 years to come. You add all those dynamics together, and I think there's phenomenal opportunity for an international hotel operator with a portfolio of 13 brands to grow our presence in Indonesia, and that's what we are committed in doing going forward.
Splendid. And Gaurav, I know Accor is hands down the big giant, and when it comes to Indonesia, I think the second largest brand, if I'm not wrong, is Archipelago, which is a local Indonesian company that has about 200 odd hotels and about 15,000 rooms. You said you have 20 odd thousand already in presence. Do you feel you're saturating yourselves, or do you think there's room for further growth in this market?
No, I mean, Indonesia continues to, on the contrary, to be one of the powerhouses for us in developing our network. Not just in Asia Pacific, but globally, it's one of our biggest markets for development. I mean, we spotted the opportunity in Indonesia very, very early in the piece. We have had strong representation. We have a corporate office here with over 70 people, all across all functions, and we've had strong on-ground representation in Indonesia for 20 years. So, we invested in the market, in the potential of the market long time ago, And in our business, we feel you've got to do that. If you want to build a real business, you want to be close to your owners, you've got to be on the ground. And you've got to have a team that you trust, which is mandated to take the decisions, to deal with the owners, to run the business, and you've got to be on the ground. You don't grow businesses in markets like Indonesia, a country the size of Indonesia, by remote control from Singapore or Paris. So that's been our philosophy. We've had the team on the ground. We have a fantastic team on the ground, and they continue to fuel a fantastic pipeline. At least half our development comes from our existing owners, and to me, that's a real testament of confidence, of trust. So, as I mentioned, we have a great pipeline, and that's only going this way.
Well, given that we have a fair amount of owners and prospective owners in the audience here, Martin, I'm going to go back to you. Would you try and assess for the audience here a couple of strengths that Indonesia presents to you as Hilton, as a brand? What do you view as Indonesia's strengths and opportunities for you to grow in? And maybe a couple of challenges that you have in your early days here faced from an entry standpoint.
I think first of all, it's a country with an incredibly rich cultural fabric. So it is not a hard sell to sell Indonesia. The strength you have for Indonesia right now are, number one, the underlying fundamentals, which I just mentioned. You have an incredible increase in inbound tourism, in particular also because the government prioritized tourism as one of the main pillars driving the GDP for the country. You look at projected increase in the affluent middle class from somewhere 80 million to 140 million in the next 5 years. Now, those are people that will start to travel. They travel domestically. So you're looking at the need for branded accommodation facility over the next years to come. You put this together with a still relatively weak currency, with the great initiatives of the Indonesian government to have the visa waiver program, which right now is in place for 160, 170 countries. All of this together makes me incredibly confident that there's a lot more potential to grow within Indonesia. We are at this point in time deploying 4 of our brands, and when I say 4, it's 4 of 13, which is so far our Hilton brand, our core brand. It's the DoubleTree, it's the Conrad and Hilton Garden Inn, which we have here in Bali. We have actually another Hilton hotel which will come online on the 1st of December this year in Bali, right next door. And we are looking at various Waldorf Astoria projects under development. So our game plan for Indonesia is, on the one hand side, focus very much on capitalizing on the growth in the mid-market segment, domestic travel segment, with the Hilton Garden Inn brand, and at the same time continue to penetrate the market where we don't have presence right now with the brands such as Waldorf, Conrad, Hilton, and DoubleTree.
In fact, Gaurav, going back to you before I get to you, Simon, Martin briefly touched upon the currency and some of the challenges that the currency has faced in recent years. In fact, in studying our report, which has just come out on the Indonesia Hotel Watch, one of the trends we noticed was that in the last 3 years, while average rates have either stayed stable or gone up in Indonesian rupiahs, when you look at that in US dollars, for obvious reasons, you're actually seeing a decline in ADRs. And given the, at least for markets like Bali, given the sizable foreign tourist arrivals, do you, in the operating world of Accor in Indonesia, see that as something for a cause of worry?
Oh, look, I mean, obviously, financially, for a company like us who report in euros, obviously, exchange is a detriment. But taking a step back from that, a weakening currency also drives tourism and inbound tourism. So that's actually been a benefit. From our perspective, we've been able to grow steadily our business here because we're much more focused on the domestic market. I mean, we are now present in over 30 cities in Indonesia. We see ourselves as a domestic company with international brands and international distribution. So we are focused, in the end, you can't control currency. We have to focus on running our business here the best we can, making sure we're driving value, driving distribution. So yeah, in the end, those are the things you can control. And that's what we've been focused on. So yes, of course, we've seen a negative impact from a financial reporting perspective because of the currency, but at the same time, because our business is growing so well in this part of the world, in Indonesia, that we've been able to offset some of the currency impacts with very strong growth.
Okay, thank you. Simon, take your view on this as well. Given the few hotels you have in Jakarta and Bali, how do you, what's your team on the ground telling you? Are they optimistic about 2017 and beyond? Are they giving you any feelers about how the markets are likely to perform going forward?
I think Indonesia, we have seen a lot of changes over the last, I would say, 15 years. I still remember I came here, I think Mark Stanmeyer asked me to come and take a look. The first IBIS, wasn't it, Mark? How long ago was that? 20 years? 20-something years ago. And that was the first budget hotel that was built in Indonesia. Remember, Mark? I think it was about 18 square meters room or something like that. And then we were saying in those days, it is going to work in Indonesia. Guess what? That is all history now, right? So amazingly, you can see this country obviously has gone through tremendous changes over the last 20 years in a sense. And it's no different Indonesia following the trends of other countries in a way. So coming back to what Martin and Gaurav's talking about product and so forth, you know, I was just talking to one of the hotel owners yesterday, and he's very, very keen on developing halal hotels. Now, it's no question, Indonesia is the largest Muslim country in the world, so therefore there will be niche product that can be developed specifically for this particular Muslim country plus the rest of the world in a sense. So this sort of niche product will come along, and I think that would strengthen this market. 2017, 2018, depending on which city you're talking about, I think we look at the statistics that was released by you guys last week in a sense. I think certain market, Bali is going to continue to be tough in a sense. I think you guys have seen the data over the last few years, and there's a lot of new supply still coming in. So at the end of the day, you've got to really be absolutely clear how you want to pitch your product to the target market and the particular geographic area. Same with Jakarta, it's a lot of new supply coming in a sense, but that's a growing market in a way. And with the increase and the better infrastructure, I think that's one thing Indonesia and the Indonesian government is very conscious of, that we have noticed over the last few years. They are spending a lot more money and a lot more planning in the infrastructure of this country, which is vitally needed whether we want to develop commerce. Tourism is part of commerce, where we want to see continued growth, in our return on investment from the hotel sector or any other commerce sector. So I'm confident over the long-term horizon for Indonesia, will be strong. There will be some bumps and humps along the way in the next, 10 years, like any other cycle in a sense. But the focus of the Indonesian government in improving infrastructure and spending money in those areas, I think that will, I would say, underpin the continued growth of the economy and the tourism industry.
Okay, thanks. Shifting gears, and I'm going to ask some, we have leaders on the panel, so it doesn't have to be specific to a market. I'm going to ask a few generic questions, and would want to start with you, Martin. I see Raj Menon in the audience here. I had to ask this. The impending closure of the Marriott Starwood deal. And it's been a hot topic of discussion in every forum, right? And there is consensus on at least one thing, that it is going to be an interesting ride for all, not just Marriott and Starwood, as in when this deal closes and you have this giant organization. My question to you is, as the largest hotel company in terms of market cap, and I would believe even inventory in the management space globally today, how do you view this development?
Yeah, well, it's a tough one. First of all, yes, I think at this point in time, with over 1 million rooms between hotels in operation and under development, we are the largest. But commenting on the Starwood Marriott deal is a tricky one, because I think it's going to be a perfect case study for university students in Harvard or Oxford in about 5 years from now to say what did actually come out of it. I think it's a formidable merger of two strong companies. But as we all know, when you merge two companies, it's more than just bringing bricks and mortar together. It's trying to get two cultures aligned to what I would perhaps from looking from an outside in regard as two distinctly different cultures. It is trying to bring a portfolio of 30 brands together and trying to make sense of those 30 brands. And we have a stable of 13 brands, and we actually think we have our hands full. And for us as an organization, it has always been more about growing organically and developing our footprint through brands which we incubate ourselves, which we launch ourselves, and then accelerate the growth with, as Gaurav rightly said, with existing partners in order to get traction. And best case in point is a recently launched brand which we launched in January of this year, a brand called True by Hilton, which didn't exist until January. Fast forward to today, we have 120 executed agreements and a further 200 under development right now in various stages of negotiations. What it ensures for us is that when we launch the brand, when we open the properties, when we have customers experiencing True, every hotel is exactly the way we want it. What happens in an M&A activity very often is that you buy a lot of stuff and pay for a lot of things, and not everything is exactly what you want. So our philosophy in the past has always been to grow organically, and that's something which we will continue to do. And I leave the jury out for the next couple of years to see what's going to come out of the Marwood deal.
All right, Marwood, okay.
We should ask him.
Yeah, we should. Maybe we'll have some audience participation soon enough.
We have budget.
Would you like to chime in, Raj?
I'm next on the panel.
Okay.
Yeah.
All right, I'm going to ask you something similar, Gaurav. Given that Martin and Hilton believe in growing organically, I know Accor likes to do a little bit of both. You've just recently acquired Fairmont Raffles. You've not limited your acquisitions to just real estate or brick or mortar or brands. You're in fact going and acquiring companies like One Fine Stay. And I know there's a very, it's known to, I think, the industry at large that Accor has a very clinical and a very clear approach towards technology and wanting to grow in that domain and acquire things if required to get that skill set on board. In this era of consolidation, mergers, acquisitions, and so forth, given that that's a huge part of what you do, Gaurav, what's Accor's philosophy in this? How do you view this day and age and specific to Accor, the acquisitions you're making?
Sure. I mean, we're a little bit unique in that we have, today we have two parts of the business. One, what we call Hotel Invest, which is a hotel owner, and we're one of the largest hotel owners globally with about 1,350 owned and leased hotels. Then we have what we call Hotel Services, which operates over 4,000 hotels. So they're two distinct parts of the business. And we've had a clear strategy to grow both. So at a global level, we've been investing about €1 billion a year in growing our real estate portfolio, which is now over €7 billion in gross asset value. So that has really done very well for itself. And we've been helped a lot by the market. Capital values have increased. So the real estate business has been pretty good. We've also had good growth on the hotel services side. Hotel Invest is just, like I said, it's growing by real estate acquisition. A lot of what we've done is buying back leases, combining the leasehold and the freehold. So it's a very specific real estate strategy. For hotel services, we've picked two avenues of growth. One is our core business, which is brands and developing our brands. We have been buying smaller companies where it makes strategic sense for us, whether it was Mervac in Australia in 2012, Group Posadas in Brazil in 2012 as well, and then obviously this year we closed Fairmont Raffles. For us, Fairmont Raffles was a significant transaction in many ways. There's a lot of talk about M&A, but again, if you have to take a step back and look at it, and ultimately any kind of M&A has to make common business sense for the company. I mean, there's no point doing a deal for the sake of doing a deal. It has to make not just financial sense, but brand sense, business sense, and very importantly, as Martin said, cultural fit. It is crucial because a lot of what we do is all about people. So you have to make sure what you do has a strong cultural fit. For us, Fairmont Raffles was a great fit because we had a gap in our luxury and upscale segment. It perfectly fit what we needed in that segment. We obviously have a very strong position both in mid-scale and upscale. And whilst we had a pretty good position in luxury, we didn't have a leading position, and this gives us a very strong global leadership position in luxury and upscale. And that's important as a big global hotel company expanding across all markets. Credibility and scale in luxury and upscale is a very important strategic objective for the group. So we were able to do that, but it's not just about strategic fit, it's actually a very good financial model. So it's got to work on both sides, and we've spent a lot of time. We had a bit of time to prepare, 6 months approximately between signing and closing. So we've had time to prepare. In fact, Michael Eisenberg, who's the CEO, Chairman and CEO for Asia Pacific, ran the global integration for Fairmont Raffles, and I think it's gone very well, I have to say. We've so far so good. We're now a month and a half into it, but we had 6 months doing meticulous preparation. It is a little bit easier because it fits so well. They had a strong North American platform, which fit like a glove into what we were doing, because we had a big gap in our North American platform. And they have a lot of people in luxury and upscale, which we needed anyway. So the fit both with people and with brands was great. So for us, it's pretty smooth sailing. And that's really growing our brands business. We've also made a pretty focused decision to invest in the digital space. And this is going to be a huge area of expansion of growth for AccorHotels. We've started investing quite aggressively into the private rental business. So One Fine Stay, as you mentioned, is effectively the world's largest luxury platform of luxury villas, luxury homes, digitally distributed, but with hospitality services. So that's the difference with someone like an Airbnb. So we've invested in that. We've invested in 3-4 different platforms, and we see significant growth opportunities in the private rental space moving forward. We've also just announced about a month ago that we've acquired the world's largest e-concierge service called Jean Paul. So we're really, it's all about making sure you can drive a full customer experience. And we see the digital investments being a very important part of making sure you can actually touch the customer at every level. And that is at the heart of our strategy. So starting with the whole experience on a digital basis to making them experience our brands, our platforms in a hotel like this or one of our other hotels. So it all ultimately is part of one big puzzle for us. Sure. So really our strategy, because we do so many different things, we have a pretty focused strategy for each part of the business.
Splendid, thank you. Simon, I have a question on the branded residential space. Let me set the premise and give you the background, of course. Bali specifically, and other parts of Indonesia too for that matter, have seen, I think in recent years, a fairly decent number of branded residential plays taking place. And from an investment point of view, a lot of the owners often ask HVS this question, for instance, that, okay, I'm going to build this hotel. It's going to be a luxury or an upper upscale hotel. It's going to have 200 rooms. Can I do 40 villas? And will you brand them an Accor product or a Hilton product or so forth? And I want to sell these out because there is a very real and a very genuine real estate play that is relevant from an investment point of view. I see Terry in the audience there from Paradise, and I know he helps a lot of people with branded residential as well. So I know there are people working on this in this space. I know there is intent on the part of the developer to create this. My fear is that there isn't enough of an audience who is willing to end up buying these things. So while it may good look on paper, I wonder if these branded resis get sold at the pace that is desirable for a requisite IRR. What's your view on that?
Okay. Before I answer your question, Achin, I just want to pick up what Martin and Gaurav talking about the hotel platform M&A. I mean, I think in a hoteliers like us, or hotel owners like us, we need to look beyond just the hospitality industry. M&A, in outside this industry, whether it's in the drug industry, whether it's in the chemical industry, oil industry, M&A happens every day in a sense. I think the hotel industry seen a lot of M&A over the last 4 months, and in my view, it's only just the beginning, right? In a sense, obviously we talk about the Marriott and the Starwood deal. Gaurav talked, at length about the Fairmont and the Swiss hotel deal in a sense. And you can see some of the Chinese investment, or you guys know about HNA, bought into or acquiring Radisson, in a global sense. You're talking Jinjiang, who bought the Louvre Hotel in Golden Turnip, 2 years ago. And you're talking Jinjiang is now on the share register of Accor and so forth. So I think the M&A in the global sense of operating platform is only just the beginning. In my view, it's a reaction to some disruptive technology. People like Airbnb. That is, in terms of market cap, that probably is the largest market cap without a hotel room they own, in a sense. So I think that would happen. Now, obviously, behind that is what Gaurav and Martin talk about, the brand integration, the people integration, in a sense. But I think our industry will continue to go for some changes, big changes in the next 12 to 24 months, as a reaction to a number of changes in the economy, in a sense. Back to the branded residence. Now, this sort of product happened in a lot of countries, in a sense. In countries where I live in Sydney, so sort of strata hotel apartments. In the U.S., fractional ownerships. All this really happened in the hotel industry like a long time ago. 20 years ago, you already have strata ownership on the Gold Coast in Australia, in a sense. 30 years ago, you already have fractional ownership in the US and also in Europe, in a sense. The trick, in a sense, if you're talking about, how to make sure this type of product, right, can be a legitimate product from a hotel owner standpoint, from a hotel developer standpoint, and from an operator standpoint, the trick to make sure that we have the right discipline. At the end of the day, we need to have a product that will suit the investor as well as the customers. This is not a short-term thing of driving the maximum profit, in a sense. Parallel in that, you also need a very, very rigorous statutory regime, in a sense. So if you talk about countries like Australia, why the strata or fractional ownership work in that countries? Because you got a very strict regulatory regime, in a sense. The government has very tight law in controlling what a developer can sell to the market. Got very strong control on what an operator can take, in a sense. We operate a number of strata hotels in Australia, And for example, let me give you one example. The income of the hotel every night go into a trust account, not to the operator's account. That account get audited by a specialist auditor before the revenue can be split between the operator and the investor. So that provides protection for the investor, who ultimately will be the owner of that hotel. So that strong regime, that strong regulatory regime, protect the investor so they have confidence in investing in the product, in a sense. From a developer standpoint, it's also good because they know at the end of the day, the operator will follow that regime, in a sense. So certain countries who have that framework works very well. I think Indonesia is trying to establish that. We understand a lot of this type of branded product in Bali and also in Jakarta maybe doesn't have a very strong government regime to control every stakeholders along the way. So I think for that product to be successful, I think you need a strong regime. I think every stakeholder need to understand at the end of the day, you need to build a product that suits all stakeholders, whether it's a developer who want to drive the profit. I mean, this is at the end of the day, it's a capital management strategy. Instead of going to the bank and borrow at 15%, what better if you can sell your apartments to the individual owner at 6%? So it's a no-brainer in the sense, right? It's a great capital management strategy. But for this type of product to be successful as a long surviving product, in a sense, everybody works toward a very disciplined regime to protect this product to be successful.
Okay. Gaurav, while sale and lease back model, rental pool model, strata model, fractional model, all of these are just different names for the same thing that we've seen the world over, to Simon's point. I guess what I'm trying to also get from you is all of these models aside, pure play branded resi for sale and not lease back, because there is that play, especially in Bali. If you look at some of the luxury brands across the spectrum, a lot of them have built, or the developer rather, has built the hotel and has built a few residences for sale for high net worth individuals to consume. Do you believe there's a market for that in Indonesia, given the fact that also there are legal limitations to who can buy this in Indonesia to begin with?
Sure. I think firstly the answer is absolutely yes. We've been doing branded residential and strata for 15 to 20 years. We understand this business reasonably well. The trick, as Simon said, obviously you've got to have a very strong regime. But even in countries where you don't have a strong regime, we've been able to do it successfully because there's a few basics. You have to design the product properly. Strata can't be an afterthought. It has to be built in properly into the design of the property from day one. It's got to have the right facilities, the right management, and the right structure, because a lot of times it's, if you go into it with a partner who is not setting up a structure for sale and leaseback or sale which is sustainable long term and doesn't make financial sense, commercial sense for the buyer, it's never going to work. So we're very careful about the partners that we pick to do this. We do it all over the region, but we do it very selectively, and we partner with like-minded developers, credible developers who will respect the brand, request the rules that we like to put in place for such a development to be successful. I mean, we have a full dedicated branded residential team worldwide for this product. So yes, I absolutely think there's a market for it and there's a growing market for it, but it's got to be done properly with the right partner. I mean, in fact, we have two great examples of the Pullman in Legian, the Novotel in Nusa Dua. Both are great examples of strata properties that have really done well.
Sure, thanks. All right, Martin, I got a different one question for you. Gaurav briefly touched upon Airbnb in his earlier response, and I think you mentioned that a little bit as well. There is various opinions on Airbnb's impact to the traditional hotel brands, swinging from one end of the brand saying, there is just no impact whatsoever. We don't even cross each other's paths at all. It's two different audiences altogether. To the other end, where there are brands who are front and center squarely admitting that there is an impact and I'm taking a hit thanks to One Fine Stay or Airbnb or some of the other players that have now cropped up in this space. I think what I'd love for you to share with us in the audience here is your view on this new age concept of lodging accommodations, and does that have a role to play? I mean, are you as a brand proactively looking at this and looking at ways to manage it? They're competition, whether we accept it or not. I'm saying the premise is that they are competition. As Hilton, as a traditional hotel company, how do you view this?
Well, number one, I would say, I think it would be naive to say it has no impact at all. I think there's bound to be an impact. At this point in time, I don't see it significant, in particular for our brand portfolio. I think one also has to understand and distinguish when you look at Airbnb, 50% of the business they generate is where the host is actually at home. Now, that's a service we do not provide. We are providing branded hotel experiences. But I think Airbnb was a fantastic wake-up call for the industry when they launched. And if you look at us as an organization, we realized that with the portfolio of 12 brands we had, we didn't really have the right brand at the entry-level point, i.e. a brand, if you can call it as such, for the millennials. At the time when we launched Hampton by Hilton in the United States, it was launched as such. It was launched at a price point of around $75 to $80, and it was the entry-level brand, which your first brand, when you look at the scale effect, once you join the Hilton network of brands, that's where you would start. Now, because of the success of Hilton in the United States, the brand moved from $85 to $100 to $120, is now in terms of RGI the absolute roadkill, but has completely priced itself out of the market. So we didn't have a product offering anymore. And the answer to that product offering is the True by Hilton, which we launched in January of this year, to have a brand proposition that appeals to the same market segmentation that currently also uses Airbnb. And I would also to echo what Gaurav said early on, that the main driver for us in the industry, in particular when you look at Generation M, you look at Generation Z, which we don't even talk about. That's the ones after the millennials. Mm-hmm. And they're about to be released into the workforce. They're the ones who are 17, 18 years right now. They start to get out of school, graduate, go to uni, and they start to consume. And once again, a distinctly different behavior. And I can tell you that because I have two at home. It is a different dynamic. But what it is, it's all about technology. It's all about mobility. It's all about making the customer, the integrated customer journey easier. And we just celebrated the 1-year anniversary of what we call the select your room and digital check-in, that you have the ability with any mobile device, not just to select your room, you go into the room on the right floor, go into Google Map, you have the ability to see the orientation, do a virtual tour of the room, and we have this in all 4,700 hotels around the world right now. We then launched Digital Key, which so far has seen 2 million people open their door in the respective hotels with their mobile device. We are currently having Digital Key in 400 hotels around the world, and we actually just launched it in Singapore at our Hilton and the Conrad property. So I do believe that it is, on the one hand side, it's the branded offering, it's having the right price point, but also offering the right services and engage during the whole customer journey with the generation that right now uses Airbnb.
Okay, thanks. And I tend to agree with a lot of brands when they start acknowledging the competitiveness that is there to stay. And addressing it by way of technology and by way of the digital media is probably the way forward, rather than playing ostrich and putting your head in the sand. Continuing with the digital and the technology theme, there's a question, Gaurav, that we often get asked by the hotel owners when we do work for them. And in turn, I would love for you as a brand to share your perspective on what could be a possible solution to the problem I'm about to pose to you. It is a frequent affair when we come to you as the owner's consultants and come and negotiate management contracts. And it is always the case that management contracts, at least in this part of the world, are predominantly the way forward. And a majority of owner-operator engagements are in that realm. Commercial terms get negotiated nice and proper, and to be fair to the owners, we make sure that they get something that's relevant and fair to them. You are also relevant and fair to them, and you give them a good commercial offering. In this digital age where OTAs and the online travel agents are playing increasingly a significant role in the contribution to the room night demand, the challenge is that what you pay the OTA is not something that what I negotiate with you as the owner's rep. In fact, it is what you negotiate with the OTA, independent of my or my owner's involvement. So the owner, in a sense, has no control on what you're going to end up shelling on his behalf. Is there a solution to this? And this question comes up often. Manav had an owner session this morning where this came up again, and it's been discussed at length. I don't have an answer to this. I was hoping you do.
Sure. Let me just make sure I understand your question correctly. Is the question that there's no visibility for an owner to see what we're paying the OTAs?
The owner has no ability to influence what that payment will be, unlike his ability to influence what he will pay you, because that he could negotiate.
Well, I think there's a very easy answer to that question, because the owner can easily say, part of what we bring to the table is an ability to drive the OTA business at a more attractive rate than an independent hotel. And the owner can very clearly see what the OTAs are charging independent hotels to what they are charging hotels that are branded under our brand, and we use our global negotiating leverage to come up with the right deals. So in fact, to me, the answer is quite simply the better value proposition. There is a lot of transparency. Now, can the owner influence that? I mean, it's a bit hard for one owner to influence that when you're trying to negotiate a deal across thousands of hotels. But what the owner can clearly see is the value proposition that someone like AccorHotels is bringing to the table through the difference they would pay in a commission. That's very clear, very quantifiable, and it's significant.
Okay, fair point. And I think that should elevate some concerns that some of the owners sometimes have.
Yeah, I mean, we're very transparent with our owners and making them understand the value proposition. I must say, we haven't had that issue with owners on questioning or wanting the ability to negotiate with the OLTAs. In the end, owners want the best value they can find in the market, and that's our job to deliver them.
I mean, as a
the best
management
value.
company, that's what you're delivering. It's not just operations, there's a whole lot more.
Yeah.
Last couple of minutes before we have to leave the stage, gentlemen, so I'm going to ask you quickly, Simon, share with me, please, your favorite hotel in Indonesia, question 1. Share with me the one brand you would like to work for if you had to leave StayWell. I know you're founder, but had you worked for another brand, which one would it have been?
Well, I got to say, the Sofitel in Nusa Dua, I'm staying here. I just want the general manager sent me all this hospitality the last night when they came here. So, I mean, this is a great hotel in a sense, to balance a combination of being a good resort, with good leisure facilities, as well as running a business type of hotel like this is not easy. It's always a challenge if you are the management company, try to run a business that contain, in a confined space, that you need to deal with leisure customers who come with families and kids who want to spend a lot of time by the pool. Then you got another group of people in suits and like us coming to the conference and want to have fast lunch and want to have the buggy take us around and want the air conditioning and so forth. So I think this is, this is one of the great hotels. In terms of brand, I'm going to, think about it. I certainly think there've been a couple of good brands that I'd like. One particular brand that I was, spending a lot of time researching the last 2 years was Citizen M. I think Citizen M certainly broke in some way the tradition of running hotels in terms of, is it a budget hotel? Is it a young people hotel? Is technology, the way to try to drive the customers? They don't have any salespeople within their chain. They spend a lot of time on R&D and also the technical aspect of it. So I think, if someone come along and write a check and buy StayWell, got no job, then I'm sure I'll send a CV to Citizen M and try to learn a bit more from the
Thanks.
chain.
We're almost out of time. Quick one there, Martin. It's easier for him to choose one than it is for you, I'm sure.
Well, in terms of hotels in Indonesia, it's got to be in Bali, and one of my all-time favorites is up in Ubud. That's the Iba. It's a very small one, 12 villas. Stayed there for the first time 20 years ago when I actually worked in Indonesia for my sins for 4 years in Jakarta and Surabaya, and really still have a soft spot for that property. I'm not really a beach bum, so for me the cultural and artistic heart of Bali is what attracts me, and I love to go up there. In terms of running a branded hotel company, that's a tricky one. I probably decide on a small Canadian company that runs bed and breakfast mountain resorts, because that would give me the perfect work-life balance, which I'm looking for.
Fair enough. Thanks. Gaurav, last question for you.
Well, in terms of hotels, I think the Legian in Bali I've always admired, always looked up to as a great property, great experience. Stayed there a few times. It's been always a very consistent and great experience. But I must also say the Mulia, which is not far away from here, is a great development. It's not easy to create a luxury experience in such a large asset, and I think they've done a good job. It's a very nice property. In terms of hotel company, honestly, I'll give the answer in a couple of parts. It'll come back to us. Because I've always looked up to the Raffles brand. I think it's a great brand, but fortunately, it's now part of Accor. But it's something that I've always held in high esteem. There you go.
All right, gentlemen, thank you so much. And audience, thank you for attending this. I hope you found this useful. Thank you again.
Thank you.